I'm going to show you my favorite moving average. And while I've mentioned the 200-day moving average on the show a couple of times before, this one's a little bit different, but not entirely different. So we'll get into that. I'm also going to share why the market is moving the way it is today, much higher today, where that's coming from. And then we'll also talk about, we're going to address something related to whether or not we're kind of in a bubble, seeing bubble-like ingredients, things like that. And I'll hit a tiny market update as well. I must remind you, this is a financial education presentation. You must do your own due diligence before acting on anything you hear in this presentation. More disclaimer information on Ankerstarwealth.com, and the opinions expressed are mine alone. The S&P 500 up about 1% on the day. The NASDAQ and the technology space moving higher, kind of leading us higher. We have the Dow Jones that had been lagging, which I guess is down today, but it did hit a new all-time high there on Friday. So, kind of not lagging anymore, I guess, but it is lagging today, not participating. Looking around, bond yields are kind of collapsing hard in the U.S. at least. The U.S. 10-year down 20 basis points almost in the past few days. You have energy slipping. They'll tell you it's because of hopes for a peace deal in Iran. That's really not what's going on, based on what we can see. And they tell you an Iran deal is near. I don't think market participants really think an Iran deal is near. I don't think market participants really care about an Iran deal right now, but they are dropping oil just a little bit today. But you're also seeing things like the United States is conducting strikes for peace. So strikes for peace in Iran, that's not really what you would expect to see right before peace. Is like, we're going to do strikes for peace on Iran. I don't think that's really what market participants are believing right now. I think market participants are focused on semiconductors and AI, Micron, AppLovin on semiconductor. If I could show you the S&P 500 heat map, you would see that the semiconductor complex is what is moving the market higher. It is not hopes for an Iran deal and strikes for peace and all that. But you do see oil slipping a bit today. So, maybe there's a little something there, but oil has actually been climbing all morning, kind of clawing back some of the drop from the earlier in the morning. Gold, metals, mostly a mixed bag today, but moving higher, really moving higher. And then you've got crypto holding steady from late last week. Do we have a bubble? If you go look at the Korea stock market, it's probably pretty obvious that there's some bubble stuff going on in the market, but it's not the entire market. So you want to just be aware of your exposures, and I'm not going to get into all of that here. Look, bubbles aren't really a bad thing, right? People are optimistic, people are participating, people are benefiting. So we'll welcome all of that. You do want to be mindful of, like, if you owned the Kospi here, right, the South Korean index, you'd probably need to be very, very mindful. And if we go look over, before I get into that moving average here, if we go look at the equal weight, this is really nice. So we do see the equal weight S&P 500 new all-time highs today and up nicely on the day. So really welcome sight there. That's very bullish, and that is an indication that we're not just being led totally higher by semiconductors, even though they are doing a lot of heavy lifting. If we go look at financials, this has been on my mind. Financials actually down on the day, still below a 200-day moving average, but we're consolidating in a very tight range here, and I'm actually expecting this to resolve higher. I really am. I don't know when or to what extent that it will, but I think it's going to give a real strong attempt at reclaiming that level and kind of healing itself on a technical basis. So it's not the most beautiful chart, but it is the one that I had been watching the closest, as we really will need financials if we're going to continue rallying more broadly. They'll say Jesus will save you. Your mom will try to save you, but semiconductors won't save you. So we're going to need financials to participate if we're going to be saved, right? If the bull market's going to be saved at this point. Okay, S&P 500. So again, I've talked about the 200-day moving average. This is like a 10-year view here. The 200-day moving average, you'll see it kind of it tracks the market pretty tightly, right? Just the last 200 days. You could see when we get really extended above the 200-day moving average, you kind of are due for some pullback. And then if you get really extended below the 200-day moving average, you get kind of you're due for some part of a rally. You know, for the past few years, though, we really haven't spent much time messing with the 200-day moving average. And then I want to introduce a moving average that I like even more. Now, the 200-day moving average is a little more of something that it's a little more actionable short term. But down below here, you see a 200-week moving average. And you'll notice that during an extended bull market, we're going to spend probably almost 100% of our time above a 200-week moving average. And you could see when we did get to that level in 2018, that was a great opportunity there. We got to that level in COVID, it was a good opportunity. We got to that level in 2022, that was a beautiful opportunity. So it kind of is a very nice entry point during long-term bull markets. And bull markets tend to last a few decades, and we've been running here since, really, some people say we've been in this bull market since, I don't know why I'm not getting able to see back to that. But some folks would say we've been in this bull market since, whoops, Rigetti, hey, it's a quantum. The quantum is all the rage right now. We've been in this bull market since, depends on who you ask, but we'll say around 2010. So we're 16 years in, and yeah, you've never seen that 200-week moving average, which gets you 4 years of data in the line. You've never seen that waver, and then you can kind of see a similar thing going from about 1980 or so out to 2000. Now again, like if you can't really trade on this, but it gives you very good information about the environment, and it kind of it's something to help you understand the environment. What I also want to highlight is there are periods of time where you get very extended above it. And I was wondering, is there a level where, you'd want to become mindful, or you'd want to potentially protect yourself, get some downside protection as an indication of how extended you are. And it does turn out that between around 40% is really rare, 40% above the 200-week moving average. That's pretty rare. But there have been a couple of times in history where we've hit 40% above a 200-week moving average, and we haven't really been punished more broadly. I looked historically back to about 1900, and I couldn't find any instance where we got to 50% above a 200-week moving average, and we were not punished mightily from there. So that would have been a great time to sell. So then, where are we right now? We are, let me do the math here. So 74.81. No, we're not. Yeah, 75.24. 75.24. And the 200 week is at 53.37. So right now we're 41% above. So extended, right? As an investor, you want to know, like, okay, we're probably going to have probably going to have muted returns over the next, we'll say near term, midterm kind of time frame. But if we did continue higher and we got to a 50% above that 200 week, which would put us right now just at SPY 8,000, that would probably be a time to really reevaluate. So just wanted to bring that up. Hey, I hope everyone has a wonderful day out there. Hope everyone enjoyed the long weekend. And, in honor of Memorial Day, I would say that I certainly appreciate any and all service members who contributed to the freedoms that we benefit from today. I hope everyone has a wonderful day. And of course, I look forward to talking to you soon.